All right, let's get this started. Is this even? Nope. I'm gonna keep that right there for you guys to see what's going on this week. 1 second, guys. Let me share this link. And it will be good to go. Good to go. All right, there we go. All right, welcome. Those of you that are watching live, and for those of you that's gonna watch this later. All right, didn't really have a specific time for this market analysis today. I have a really busy week coming up. For those of you that are part of the live calls during the week, I'm sorry guys. So tomorrow, well, we usually don't stream live on Mondays anyways. Tuesday and Wednesday, I'm going to be out of town. I'm gonna be heading out of town for a small vacation this week. So Tuesday and Wednesday that we usually do our live calls, I'm not gonna be here. Still gonna be trading, still gonna send you guys my setups and everything like that, on my laptop and everything. So don't have to worry about that. I'll still be live. I mean, I'll still be active in the Discord and everything like that. Now, when it comes to Thursday, I should be back by Thursday, and we'll actually do our live call Thursday, and we'll do it Thursday. And let me make sure this music is not too loud. Make sure you guys can hear me. So we'll do our live call Thursday and Friday this week. Okay, that's when we'll do our live call. But anyways, getting right into it. I'm doing good, man. How are you doing? Getting right into it. What do we see is going on this week, guys? We got a lot of news. Wednesday is going to be our biggest day of the week. We have news for literally almost everything. We have pound starting off from our London session traders. That's what you're going to be looking at right here. CPI, 2 a.m. We got core retail sales, USD, right? US dollar that we trade. And we got CAD. And then later that day, we got CPI for the New Zealand. And then we got unemployment rates for the Aussie. Okay, so Wednesday is going to be a big day. Make sure you're paying attention to that day. And you are... When it comes to news, guys, I'm not going to lie to you. Usually news goes in our direction anyways, and it gives us the trade that we're looking for. So just make sure you're risking accordingly. And if you're in sell orders, try to go break even, or, just try to shorten that stop loss. If you want to stay in the trade, honestly, I don't like to trade sell orders during news, honestly, because I don't want to get stopped out by spread. So Wednesday is going to be the biggest day. We see that Thursday we have some news as well for the euro, and then Friday is going to be kind of dead a little bit because we have a lot of bank holidays. All right, so let's get straight into the market analysis and talk about what I'm looking for this week, what's going on, what's the markets looking like. We'll start with DXY. I'll talk about what I'm looking at as far as all of these blues right here. These are what I'm actually looking to trade for the week. So we'll talk about that, but let's talk about DXY. What's going on? So going on a higher time frame, guys, what do we see that already happened? We have broken this low. So breaking this low, we see that this whole thing is a redistribution to the downside, right? This was our accumulation. This was where buyers were active in this market that gave us this push. Now that we have invalidated this push, this market is bearish right now. So this is in seller's control at the moment. Now that doesn't mean this market is going to sell off forever. Okay, so as you can see, you can already see my fibs that's drawn out of this latest leg from this low here all the way to this push. It really started from here, but these are basically the same. Let me just put it right here then. Basically the same, right? It's going to have the same general area. We're getting a reaction off of this reaccumulation. Now, honestly, I think we continue lower. I think we might get some pullbacks, and then we continue lower down here into the 71 and the 80 before we get a big correction towards the upside, right? After that, I'm not really sure what's going to happen. I'm not going to lie to you guys. If I go on the weekly time frame here, you can kind of see we already bearish on the dollar, right? Based on structure, we have this huge accumulation. Now, this looks like a huge reaccumulation. So that's why I'm expecting the market to come down into this point down here before we get maybe another accumulation that sends us higher past these highs, right? Right now, market cycle is bullish. We're seeing accumulation, we're seeing reaccumulation. So market cycle is bullish, all right, on the higher time frame. But right now, let's zoom into the daily. Let's look at some daily candles. What am I expecting? I'm expecting more bearish price action. Remember, as we were talking about this, looking at these candles, guys, is all you need to see, right? The daily candles is all you need to pay attention to. Look at how bearish this market is. Look at the bullish daily candles here. You see how the bearish is more impulsive. The bullish candles are weak. Bearish candles strong here. Bullish candles weak, right? So I'm expecting another push towards the upside to fill some imbalance like we did last time. We have a lot of imbalance sitting right here. A lot of imbalance sitting right here, right? So I'm expecting the market to pull back. Probably not soon, as you can see how last week kind of closed out. Just zooming into the price action in general, we took out Asian highs here. Boom, and then we're getting this reaction down. I would expect another manipulation of this low here, and then for us to build an accumulation that gives us back higher to fill all of this imbalance right here. Okay, that's what I'm looking for. Now, honestly, guys, if this high gets taken out, I'm going to expect us to continue a lot higher to come into here and fill up most of this price action. So just going on a higher time frame, if this high gets taken out, this is the last mitigation of this range. The market taking out this high is showing weakness in sellers. Okay, so if we take out that high, I'm going to expect this to go past this high here and just fill up all of this right here. We could also probably maybe get enough of a retracement to get back into here, but the way the economy is looking right now, don't expect that. Okay, there's a lot of fear in the market right now. So until the market gets that confidence back, no one is looking to buy into the market at the moment. Excuse me for a second, guys. Drink some water. So right now, the way the market is looking, I think we continue this bearish pressure. All right. So here would be the next area I would expect us to come back into once we get that retracement. Okay. Now let's move on to the pairs. Let's look at what we're looking at. I'm gonna cover the pairs that I've been looking at this week and what I have taken this week. So Euro, you guys can see we have an invalidation of this high. I haven't done my market analysis personally. I wanted to wait to here to actually chart up with you guys so you guys can see how I start the week. All right, so we took out this high, right? Very important high. Go to the daily time frame. You can see why. Had a lot of selling pressure at these highs here. How do we know there was selling pressure? Distributions, right? When you see distributions, that means sellers are getting to the market. People are taking profits, selling orders, okay? We have distribution here, and then we have a distribution up here. Let me go ahead and zoom in so you guys can see that. It's on the lower time frame. There it is, right? Distribution. Okay, so seeing those distributions means we had potential sellers getting into this market, potential people taking profits, just sell orders getting into the market. You see every time we got distribution, we got to sell down. Okay, so what has the market done since then? We have invalidated all of this selling orders and we broke this high. Because we broke this high here, this market is now bullish for me. So even though I was already looking for buying opportunities, and the reason why is just look at this huge range right here. This is a lot of buying orders that's going into the market. Okay, huge range, a lot of buying orders. Look at that impulsive move. That is showing buyers are getting to this market. And then look at this next impulsive move. It's showing buyers are getting to the market. So I'm just showing you guys my directional bias at the moment and why I'm looking for what I'm looking for. So once you get that directional bias and you have your directional bias, you want to find your demand zones, right? We're only strictly looking for demand zones right now. I'm not looking to the left, looking for where the market's going to react from. All of this is old price action, okay? All of this is old price action, okay? Now, I expect the market to come into here and probably react from somewhere, but I am not going to do that. I am not going to try to take sell orders from these areas until I see the current price action react from that area. So until we get some change of character, or we break a low, or we invalidate this bullish price action somehow, we're going to continuously look for buyers. We're going to continuously look to buy the market, okay? Follow the momentum, follow the trend, all right? If you're trading supply and demand, you're trading ICT, you're trading anything, you find the bullish fair value gaps, okay? Find the daily ranges, find the daily candles. All right, that's what you want to do. So just zooming into here, you guys can see we have another accumulation right here. Market pushes higher. Now this is a trade here, and you guys can see. So basically what we had a manipulation of the lows, manipulation of Asian lows. You guys know in a bullish market, we're looking for the market to take out lows, okay? We're looking to manipulate lows and go higher. It's exactly what happens here. On the 4 hour, it's very clean, it's cleaner. You can see we have that one candle that sweeps these lows with that wick, and then we have 1, 2, 3 impulsive candles that breaks this last high. All right, with that happening, you have a manipulation, you have an impulsive move. There's your trade, right? You take your entry where the impulse happens, market goes higher. All right, now for this trade that we are currently in, if you're in the Discord, I sent this on Friday. I wasn't expecting this to get activated. Honestly, the way the market was going, it looked like we were just going to continue higher. So I'm kind of surprised this came back, but we are currently in this trade, and I am holding this trade. And simply, it's the same thing as I just showed you guys, just on a smaller time frame. All right, we have the manipulation here. We have impulsive move. We have 1, 2, 3, almost 4 candles that breaks the high. The market comes back to the manipulation. We also engineered some liquidity as well. So this is a trade that we're currently in on EU, and this is what I'm going to be looking for. As the market is going higher, this is the simple setup that I'm going to be looking for. All right, this is my prime setup, guys. I usually look for this on the 1 hour time frame minimum, so I need 1 hour candles, bullish candles like this, in a manipulation. Okay, that's pretty much it. And then of course the directional bias that I just showed you guys. So it's really dependent on your directional bias. Having a right directional bias and understanding where the market is going, it doesn't matter what you're trading. If you don't know where the market is going, you don't have to know where the market is. If you don't have an idea of why you want the market to go in a certain direction and what gives you those confluences, you can trade supply and demand, you can trade fair value gaps, you can trade ICT. It doesn't matter. You're gonna lose if you don't have a directional bias. You need to have a directional bias before you start looking for your areas in your setups, okay? That's the selling opportunities. There was also like supply zones that I could have taken, but we didn't take those areas. We weren't looking at those. So buying opportunities, I'm gonna continue looking for buying opportunities like this. Now, GU, same thing. GU kind of left us. GU's the only one that left us this week, I believe. Yeah, GU, I'm looking for the same thing. I was looking for us to actually come into this area a little bit deeper down here to where you see that buying order is, but we just did not make it. We did not make it. We have a huge reaccumulation here on the on 4 hour time frame. We're already bullish. Let me get this here. You guys can see we have this low, we have a high, we have this low, we have a high, we have this low that's going to create our new high. So I'm looking for more bullish price action here on GU. So I was already looking for buying opportunities on GU, honestly. Last week's move here, that was just from Trump scaring the markets. Do you delete limit orders once the New York session is over, or you just let them be there until the market triggers? Until the market triggers. I have certain rules that invalidates my limit orders. So for this case, GU, Once we break this high, this limit order is not active anymore. Reason why is because the market came within like what, 7 pips of my order. So this should have been an active trade. I'm not gonna expect the market now. If we just sit here and we come back, that's fine. But let me add an alert here just so I know, because it's very crucial. Once we break this high, this trade is done, right? Because if buyers wanted to fill this area, they would have. So what this is telling me is we don't need this mitigation, and all we did was fill imbalance. We filled imbalance here, and you can see the market is kind of running away from this area already. So once we run away and we break this high, no more, right? We're canceling this order. So what I'm going to be looking for is I'm going to be looking for this market to continue pushing. Now, I would have taken a trade from this price action, but you guys can see, look at the difference, right? Look at the difference in candles. And this is how you look for the right, demand zones, the right areas and everything like that. Look at the difference in candles. You see how these candles here are more impulsive. We have imbalances. We have clear bullish candles, right? Just clear bullish candles versus these candles right here. We see the bullish candles, right? But look what also the market is doing. Bearish candles inside of here. This price action is much more weak than this price action. So the reason I'm saying this is because if the market goes higher and then it pulls back, I am not going to be looking for a trade out of here. Okay? Because this price action here is not the same as this price action. This price action here was fueled by buyers. This price action is fueled by a reaction off of an imbalance. Okay? That's not what I'm looking for. I like to see imbalances for the market to come and fill those areas, but I am not going to trade price action that is fueled by imbalance, especially since it's not impulsive. If it was impulsive price action like we've seen here, then we could have taken this area as our next trade to take this higher. So until I see the market give me maybe a manipulation of these lows, probably, and then we explode, then that is something that we could take towards the upside. All right, it's all about following the momentum, following the impulsive movements. Because you guys got to understand, for the market to create impulsive movements like this, it takes a lot of money. So you can't hear me. Can you guys hear me? No? Yes? Don't want to continue if you guys can't hear me. My end, it says I'm recording fine. Okay, you guys can't hear me. Okay. All right. Okay. Good. All right. So, yeah, we're looking for these impulsive movements to the upside. So, sadly, GU left us. Broke my heart. Sadly. This is actually my favorite pair. It's the pair that I backtest the most. So, I'm kind of upset. I'm kind of upset with it right now. But we're going to continue looking for these bullish pushes here. Hopefully, well, I hope that potentially we do come lower and then we get that fill. I'm not deleting this limit order until we break this high, guys. Okay, just let you guys know. But I am going to continue looking for buying opportunities. If you're in the Discord, when we get the next opportunity here on GU, you will see it. Right now, this is the only area I'm looking for until we just break this high. Monday opens, we'll look for the next trade. We'll look for the next opportunity. All right, moving on to AU. I am looking, let's zoom out real quick. So I'm looking for bullish opportunities on AU as well. It's just that we didn't get the clean price action that we got on EU and GU, right? So I'm going to expect this market to continue going higher as well to actually, since we made this high here that just created this new low, I'm expecting us to come back into this price action. Why there? It's because that's our manipulation on the daily time frame. Right, you can see this is the last push up before we got that push down. So I'm gonna expect this to go higher, especially because DXY is bearish. Okay, when DXY is bearish, guys, buy EU, buy GU, buy AU, sell UCAD, sell USHEF, sell USDJPY. It's that simple. Now, the only thing is, once you have that directional bias, it's just waiting for those setups to actually happen. Right, you don't want to just buy the market randomly. Okay, you still need your setups. You still need. It just gives me more confidence knowing that, we have a good direction. So when I see those setups come in, I'm confident. Okay, so here on AU, you can see we created here this accumulation. So we do have buyers getting into the market. You can see we created this area here. Actually, this is a nice area. The only thing I didn't like about this here is it happened too late. It happened too late, and then we just have liquidity underneath, right? We didn't take anything down here. We have Asian lows. We have all these lows. I don't like taking entries on impulses that does not have manipulations, okay? Especially when it's Asian lows underneath. You're just setting yourself up to get liquidated, okay? All of this price action here, liquidity, all right? This is why we're not taking any buys just yet on AU. So what I'm gonna be waiting for, hopefully what we do get potentially, maybe Monday we open up, we get a manipulation and we explode, right? That's all I need. I just need a manipulation. These moves aren't bad. I like these impulsive moves that we're getting higher. I just don't see the manipulation. If you don't see the manipulation, you're probably going to be part of the manipulation, okay? Trust me. I like the imbalances. I like the moves higher. I just need the manipulation. That's the only rule that I'm missing to take a trade from here. But I am not looking to sell anything here, guys. I am looking for this market to continue higher. So I'm going to be looking for buying opportunities to continue this market higher and take out all this liquidity. That's what we're going to be looking for here on AU. UCAD. So I was looking for a sell here on UCAD as well. Just to zoom out, you guys can see what's going on, right? We have low here on the daily time frame to this high. This is 1 hour structure. So this low here is to this high on our 1 hour. So we have that 1 hour structure that was leading us to the upside. And then our fibs is just drawn out on that 1 hour structure. Okay, so you can see this market is kind of entering into discounted pricing. Now, here's a key thing about this. So as the market is falling, you can see this market right here, we don't really have anything here until we reach to this area. So I am confident that this market will continue falling very aggressively until we get to this origin. Okay, so now when that happens, the market is still bearish. Okay, we don't want to predict what the market is going to do. Yes, I want to see the market come down here, give me a reaction, and then we start looking for buying opportunities to continue structure, right? That's the overall thing. That's the common thing that we want to see. Structure continue. Doesn't mean it will happen. So when the market pulls back and we're getting these bearish setups, I am going to continue following the bearish setups until they get invalidated. Okay, that is very key. Until they get invalidated. We want to be wary of this area. So let's say if the market is coming down and then we come into this area and then you see the market just start getting slow, right? That's when you want to pause. All right. But as the market is going down aggressive, continue following that. All right. Continue following that bearish setup until it gets invalidated. So basically that change of character that I say that we need, when we get that, I broke the area. When we get that, it's going to look like this, right? Change of character. Once you get the change of character, sweep of the low, you take your entry. Okay. You take your buying entry off that first change of character. That's when you want to buy. Until then, we're going to continue looking for these sell setups. Okay, so here's what I was looking for here on UCAD. We didn't make it. We did not make it, unfortunately. But this is still going to be the area that I'm looking for because we just have liquidity here. I'm not going to take anything from this area since we just engineered liquidity. You guys can see that. And then we still have imbalance up here that the market could potentially come and look for. So even if this market, let's say, continues lower, and then comes back later, this is still going to be active for me, guys. Just letting you guys know that. So that's where I'm looking for here on UCAD. And just to kind of explain the setup a little bit more, so you guys can see my setups are like repeating, right? You want to find something that you can repeat over and over and over and over. That's the best way that you want to trade. All right. To keep it as simple as possible, find a setup that you can repeat over and over and over and over. Okay. Something that you can see either weekly, daily, just something. All right. You don't want to change while you're getting into a trade every single day, or you don't want to trade one way this week and then trade a completely different way the next week. You're not going to be long-term profitable that way. All right. You want something that you can replicate. So here we have a distribution. And that distribution takes out Asian highs, right? We can see all of these highs got swept out right here from Frankfurt, right? That's an hour before London session. That Frankfurt sweep all these highs, clear distribution. We know distribution means selling opportunities, sellers getting into the market. All right. So that distribution leads to what? We lead to a impulsive move, right? So impulsive move, break of structure. Now going on the 1 hour, what do you guys see? You guys see a candle right here that sweeps the highs, and we have a clear impulsive move that breaks the low, and we have clear imbalance inside of that candle. All right, that fits all of my criteria. This is the exact same trade that you've seen me take on EU, just for a selling setup. So this trade and this trade are based on the exact same criteria: manipulation, impulsive move, break of structure. Okay, manipulation, impulsive move, break of structure, imbalance. That's it. All right. So it's that simple. That's what I'm looking for. We engineered liquidity here. So this limit order is still active. That's where I'm going to be looking. The only way this limit order, I will delete this, is if the market creates a new area. What does that mean? Let's say Monday we open up, we range over here, and we just sweep Asian highs, and the market just explodes lower. Keyword, it has to explode. Okay, for me to not trade this area anymore, I need to see the next explosion. You guys can see how this market exploded. Right here, we don't have an explosion. That's why we're not taking anything from here. There's liquidity up here. We need the next explosion. The explosions, quote unquote, impulsive moves tells us that we actually see sellers. Okay, because it takes a lot of money to create those type of moves. Okay. So that's what we're looking for. This market is already bearish, as we can see, towards the downside. So we're going to continue looking for sales. Moving on to USHEF. All right. So USHEF, I was supposed to be taking a trade from here. And honestly, what time did this happen? 6:30. 6:30 in the morning. I wake up at 7. So by the time this trade already happened, when I woke up, this was already done. All right. When I woke up, the market was right there, right here. And I don't chase the market. So we do have the same setup here, guys. We have the manipulation of the highs. We have an impulsive move. So if you're trading during London session, there's your move, right? Let's go to the 1 hour real quick. There's your move. The market comes back into that candle. I think we barely came into that candle. We barely filled it, right? I think we missed it, actually. Oh, wow. That's great. Yeah, we missed it by like a pip or two. That's funny. But that would have been the trade, though. That would have been the trade, right? This is a trade as well. This all happened during London session, and I'm asleep during that time. So when I woke up, this market was already active. Well, they didn't activate it, but this market was already going down. Okay, so I was looking for the next opportunity, which was going to be out of here. But for that day, I already had too much risk on. I had risk on GU. I had risk on EU. And then I'm going to talk about UJ. UJ really, you're going to see what happened. But I already had too much risk, and I missed the overall move. Okay, this is the move that I really like. I like the first manipulation. So you guys see here, there's a difference between this trade and there's a difference between that trade. What's the difference? This trade right here, this is the first manipulation that takes out Asian highs, and then we get an impulse. This is the original move. This is a piggyback move. Okay, this is a piggyback. It's just a manipulation of the original move. Based on my back test and my back testing sessions, the original move is always going to be the highest probability. Okay, so I usually like this 10 and stick for the original move. Unless, the second move gives us like, crazy move as well, then we can take the second move. But most of the time, I like to take the original move. Now, I would have taken this if I didn't have so much other selling opportunities and other setups that same day. You guys see we had EU, we had GU, we had UCAD, we had UJ. So I had other opportunities. I didn't have to settle for a second move. Okay. But I'm looking for sales here on USHEF as well. USHEF especially is very bearish. Okay, I was back testing this pair, guys, and this market, very, very, very impulsive. This market moves very heavily. I didn't realize how strong this market moves until I started back testing it deeply, and this market moves very, very heavily. Okay, so we're very bearish here. I'm going to be looking for the same thing, guys, looking for bearish setups, looking for this exact same replica of this trade towards the downside. Right now, we haven't done anything. What I would need to see, since I am not looking for a sell here no more, what I would love to see here is a manipulation of something. So maybe we take out this high and this high before we just continue lower, break this low, and then boom. Any trade that we're going to take, this low needs to be broken, and we need to see a manipulation. All right. And then we'll take our next trade off of the area. Okay. Okay. Moving on. UJ. Let's talk about UJ. UJ stopped me out on Friday. Unfortunately. Very, very unfortunate, right? You guys can see barely got stopped out. I know this market is going to continue lower, guys. I know it is. So bearish market. Okay, bearish market. Let's zoom out. 4-hour time frame. You can see our directional bias is already bearish. We pull back. We got a distribution at the top, and since then we've been seeing bearish order flow, bearish order flow, bearish order flow, bearish order flow, right? So this is what we're trading. We're just following the bearish order flow. We're following the bearish price action. Okay, so we're looking for supply zones. And the first area I was looking for was up here. We did not make it to that area. You guys can see we kind of just swept these highs here with this impulsive move that happened on, what day is this? Wednesday? This happened at 1 o'clock. And then we got our next move. Friday gave us the setup that we were looking for, and it's the same thing. We have a manipulation of Asian highs. Manipulation of Asian highs here. We have the impulsive move to the downside, break of structure. We got some small reactions here, but market ended up stopping me out. It happens. It is what it is. You guys can see this trade and EU is the exact same trade. They're based on the exact same criteria. And this just goes back to trading, right? You're not going to win every setup. It's okay. So, yeah, UJ stopped me out. I'm going to be looking for this market actually now to break this low before I look for anything else. Simply just because we took out this high. That would be an invalidation of supply, technically. So now I need us to continue back lower, right? I just need us to continue back lower. I'm not going to try to get back into this market, guys. It already took me out. We're not going to try to chase the market, okay, and get revenge on the market. It happens. So boom, we're looking for sales here on UJ. I'm just going to be, let me delete this real quick. I just wanted to show you guys that. But I'm just going to be looking for the next sell, all right? The next sell to the downside, and we'll take that trade to the downside, okay? Let's talk about gold real quick. Gold is insanely bullish. Insanely bullish. I don't see this market stopping anytime soon. I already have the next area, 3,500. This is going to be the area that I'm going to be looking for. If you did not invest into gold, I'm sorry. You missed the best prices. Remember, I was telling you guys since 2007.50, right? Go back, go check the market analysis back around this time, around November. Since back then, I was telling you guys to buy gold. So whoever listened, good job. Okay. But yeah, gold is going to continue going higher. The next target is going to be 3,500. Zooming in, honestly, what I realized, it was easier to invest into gold, like just buying gold itself, than trading gold. Because what I realized with gold's price action, it moves heavily during Asian session, right? You can see our manipulations are not happening and this market is just going higher. Okay, it's just going higher. It's not really giving any pullbacks. It's not really giving anything. So if you're going to trade gold, you basically have to scalp gold. And right now it's going to be easy to scalp because all you're looking for is bullish impulses. So on the lower time frame, all you're going to look for is bullish imbalances. You could probably stick to the 15-minute. Look for impulses with imbalances. So for example, you see a move like this right here, this impulse. If the market would have came back into this imbalance, that would have been a buying opportunity. Since the market is not giving any manipulations, you got to look for the imbalances to trade off of. Okay. Here's a case right here. See his impulse takes out the high. There's your imbalance. There's your trade. Okay. There's your imbalance. There's your trade. You're looking for those impulses and you're looking for the fill of the imbalances. There's the imbalance. There's your trade. Well, impulse, imbalance, impulse, imbalance right here. Here's another one. And this is during Asian session, which I don't trade, but I want to show you guys what you can do if you are trading gold. There's your imbalance right here. There's your trade, right? So you're just going to be following the bullish impulses, trading off of the imbalances. This didn't make it back. This was during. There's your imbalance. Market pushes off of it, right? We don't have the next area. We do have one right here. Is a small imbalance. Market pushes off of it. Okay, so that's how you want to be trading gold at the moment. Gold is just pushing higher. Follow the bullish impulses and trade off of the imbalances. Trade off of the imbalances. And like I said, just to finish this off, the target is going to be 3,500 for gold. 3,500. That's going to be the next target, higher time frame. Okay. All right. Let me see. I think, yeah, GJ, this is still something I'm looking for. All right. This order is still active. I'm not looking to sell GJ anywhere else other than here. All of this price action here is just liquidity. You guys can see we have like 3 highs. 1, 2, 3 highs creating a trend line. This is liquidity. Okay. There's liquidity up here. Liquidity up here. So I've been waiting for GJ to give me my next trade idea and it hasn't. So this is going to be the area I'm looking for. And it doesn't matter how long it takes to come back because I have other pairs that I can trade. So I'm chilling. I'm waiting for GJ to either create a new move for me or come back to where I'm already looking at it up here. I think CAD is the same. Actually, I don't have anything on CAD. I don't trade ranges, guys. I don't like the market ranging. So CAD is ranging right now. I need us to exit this range. All right. That's what I'm waiting for on CAD. I'm waiting for us to exit this range. If I'm going to give y'all directional bias, bearish. Okay. Same thing on GJ, bearish. CAD, bearish. Okay. We are going to continue lower until we get into this point right here. Which you guys can see, we're kind of already almost there, but we need a little bit more. This is the daily area. Let's go from here. Boom. From this low to this high is our daily range. Okay. From this low to this high, that's our higher time frame. But let's look on the 4 hour. Let's look on the 1 hour time frame, right? We are still bearish. Okay. Structure is still bearish. This high creates this low. 1 hour, this high creates this low. So what I'm looking for is I'm looking for more bearish structure to the downside that gets us back into this daily area here. At least the 50%, I'm thinking, right? At least get back to the 50%. Let me see what our fibs is looking like on the daily time frame real quick. Just in case. I think we make it to the 70. Barely. So we're almost there. We're almost there. We are almost there. So I see why this market is ranging, honestly. We're almost there. We're getting to discounted pricing. So we potentially might create a big range here, meaning we might start this accumulation. So I'm going to expect the markets to still continue lower because we have to sweep these lows before going higher. So I'm still looking for bearish setups to sweep these lows and potentially get more manipulations before we get that push that gets us that change of character. Once you see that change of character, you know that the hands are switching from sellers to buyers. So you're going to switch and look for those buying opportunities, look for those buying impulses, and then we're going to start changing around, right? That might take a couple days. It might take a couple weeks. It might take a couple months. You don't know, okay? But that's why I'm saying look for the selling opportunities right now. You don't want to try to anticipate when the market is going to buy. Don't anticipate the market, react off of the market. So if we see the market is going lower, even though we know that we're trading into, yes, I'm going to talk about your chef because your chef looks good right now in a second. But yeah, so don't anticipate the market. Trade the market, okay? Trade what the market is showing you. So the market is still bearish. We're going to continue selling it until buyers show themselves. All right, you have to be strict with the market, guys. If the market is strict with us, you be strict with the market as well. All right. Don't let the market play around. So if you don't see what you like, don't trade it. Simple as that. There's other pairs. There's other pairs that you can trade, indices. You can trade anything else. Okay. You don't have to force a setup on a pair. I think I see a lot of people doing that. You know, some people, you know, they have their favorite pairs, so they're going to try to force trades on their favorite pairs. No, just go to a different pair that looks better. AJ looks good as well. We're in a bearish structure. You guys can see here, high to low, high to our next low. We trade back into the fibs. Boom, boom, boom. Okay. You guys can see I was already looking for a sell setup here on this market. Now, why did I not take this trade? This is very crucial to anybody that's looking and that's trading my same A setups. This here is valid. This is a valid manipulation. We took out Asian highs. We see the impulsive move. This is where we do not take this trade. Why? Why did we not take this trade here? We got the impulsive move. We got the impulsive move to the downside. We see the imbalances in here. We see the manipulation. This wick right here is the only reason why I did not take this trade, guys. We need to see impulsive candles that breaks through this low. It has to be that way. We need the market to break this low with a full body candle on the 1 hour. It has to break on the 1 hour with a full body candle. That's a strict rule. The manipulation, strict rule. The impulsive move, strict rule. The imbalance, strict rule. The break, strict rule. Okay, these are strict rules. It needs to happen. Even though the market did break this low, it has to be a body candle on the 1 hour. That's the only way we take that trade. Okay, so you can see the market just impulsed to it. We didn't take a trade there. So it is what it is. All right. So what I'm looking for here is basically I'm going to draw this fibs out right now. And I'm just waiting for this market to trade back some more. You guys can see after this impulse, we're kind of still seeing buyers are kind of taking this market a little bit higher. So what I'm going to look for as this market goes higher, this is going to be the area I'm going to expect this to come into. So let me draw that out for you guys here. This is going to be our supply zone. But this market could very well get to the 71 and take off. Okay, that can happen. So what I'm going to do, as this market is trading higher and we're creating the structure higher, if we see something clean, right, I'll take it. But you guys know that UJ right now is bearish, so I'm going to expect this market to continue bearish as well. It's just I need to see this, right? Let's say if we keep going higher, I want to see this break. Since we're at the 50% and we're in premium pricing, all I need to see is a change of character. Maybe at these highs, we take a high, manipulation, impulsive move, and we'll take that to the downside. Okay, that's what I need to see. Until we see that change of character, that's not happening. All right, so until that happens, we're gonna chill. I'm gonna expect this market to go a little bit higher though, probably to the 71. That's what it's looking like it wants to do. ACAD, I would have had an entry on ACAD. I might still have an entry on ACAD based on the 4 hour. 4 hour is giving us some clean candles. The only thing I'm waiting for here is this high, right? I need to see this high taken out with the body candle, as we just talked about. This high's still not taken out, so I'm not going to take anything from here just yet. I do like the fact that we manipulated these lows here. On the lower time frame, you guys can see a very clean order that took out these lows, took out all these Asian lows. I don't like this. I don't kind of like this. I really would have loved the market to explode, but just looking at it on the 4 hour, we are seeing rejections and full body candles on the 4 hour. So what I'm gonna wait for is just the next body candle that breaks above this high, and then our entry can come from this candle right here, this manipulation. I'll probably take the 50% of that. I'm not gonna set that order yet. I don't want anyone mistakenly taking this trade just yet, because I am not taking an order here just yet. I still need to see that confirmation of this high, but that's why I have it yellow, okay? Because this was something I was looking for, and I'm just waiting for that trade to confirm. Once that trade confirms, we will be looking for buys. And the reason why is because we just have imbalance that we can target, right? Just easy imbalance that we could target for this market to come and fill. That'll be an easy trade for us. Okay, so that's what I'm looking for. I'm just kind of looking to see if this pullback is going to continue happening so we can come fill this imbalance. And then up here, I want to see what time this happened. This happened at 1 o'clock. So that's not a limit order. So what we're going to do now, let's zoom out. Let's see. We have this high. Once we get back to these highs here, and let's draw our fibs, I think we are getting into premium. We're right there. We're almost there. Okay, so this is why I also think the market can continue going higher. We still have not made it back to equilibrium. We still haven't made it back to the 50%. All right, so I'm going to expect us to make it back at least to the 50% before we start seeing any selling opportunities. And I'm going to expect us to take out this imbalance. So looking for bullish impulses towards the upside until we feel this imbalance. We'll probably trade into the 71 before we see that change of character that gets us that next leg towards the downside like this. All right. But for now, I'm looking for that buying opportunity. Yeah, I needed to just stay above this high right here, man. I just needed to go above this high. Once that happens, I will let you guys know, and I will send the trade and where I'm taking the trade from. Most likely, I don't know if I want to take an aggressive trade from this or I want to take a safe trade. Reason why is because this wick right here looks pretty nice. I might just take my trade off of this wick here. Because we already mitigated everything inside of this. I don't expect the market to really continue down past this area. Everything is mitigated. Every single imbalance, you guys can see this imbalance right here, filled. This imbalance right here, filled. This imbalance right here, filled. There's a small imbalance right here. You can see we have that wick that trades into it, filled. Imbalance, filled. This is the only imbalance right here that is not filled yet. Okay, so I really don't see any reason for the market to really give us a deep retracement down here unless it's just going to invalidate the area. It's not a signal group, bro. Just go on, you can go on my page and just click on the links. You're going to see the Discord. It's going to be a free Discord. All right, you just click on the link. You'll be able to join for free. So yeah, I don't do signals. I don't do signals. I just send the trades that I'm taking. Okay, if you consider that signals, then I don't know. Yeah, I don't do that. So whatever trades I'm taking, I just send it out, and you guys could just trade with me, take the same ideas, and that way you guys can see how I take my trades and why I take my trades, and maybe that'll help somebody out. Maybe that'll help somebody become profitable. Maybe that'll show you a new light, show you something different. However you want to use it, but I just share my trade so you guys can see it. All right. So that's what I'm looking for. Okay. I'm looking for this impulsive move to the upside. And just to touch on that a little bit, I think it's a lot better that I teach you guys how I trade rather than just send signals or, you know, just send things that you guys could just copy. I want you guys to actually learn how to trade. Okay, I want you to learn how to trade and learn why I'm taking the trades that I'm taking, so you could just trade right alongside with me. Okay, so join the Discord. There's a free link. It's a free link, and then you're gonna see when I send my setups and the trades that I'm taking. I send them before I take them. Most of the time. Sometimes I forget. I'm not gonna lie to you, but most of the time I do. GCAD. This market. Man. This market has been really, really clean. I just need us to actually pull back into our manipulations. So you guys can see this market, we've just been filling imbalances. Filling imbalances right here. Imbalance filled. We got the impulse. We got the manipulation. Impulsive move. Imbalance filled. Another move to the downside. This is the only area that we came back to mitigate. Okay. I did talk about this area here in my last market analysis. So for those of you that caught on to this trade, good job. Okay, this was the last area we actually did mitigate this area. You can see our first two areas we did not come back into. I still have those orders that was sitting here. Honestly, am I holding those orders? I would say I'm still confident in this order right here. This order I'm still confident in. We can just sweep liquidity, okay? But honestly, as well, I don't want the market to come back, to be honest. Why? Because I want us to continue lower, all right? I want us to continue this bearish move lower. I don't want to wait for this market to make its way back. I would rather it continue bearish setups that we could just continue following lower, okay? So GCAD, I am looking for bearish setups to the downside, just to get back into this discounted pricing, which we are getting into. We tapped into the 50, which is why we're getting this reaction. You guys can see we tapped into the 50 right here. So we are getting that reaction right there, and we're filling imbalance. I don't know if we're going to make it to the 70. Hold on. So we might be able to hedge this. So this is what we're going to do. I'm going to move this to the left. Move this to the right. We might be able to hedge this. All right, so this is our last high. This is our mitigation that creates this low. So that is where our last mitigation is. And let me delete this. So we tapped into 50%. What do I need to see? Okay, so here's what we do. We're going to protect ourselves. If the market continues going lower and we continue seeing impulses lower, we'll continue selling the market. If the market gives me a manipulation of these lows right here and we break this high, I will take this buy opportunity here and I will take the sell opportunity. So we're going to take both. All right. We're going to take the buy opportunity after we break this high, and we're going to take the sell opportunity up here. That way, if we want to continue the order flow, right, we have this high to this low, this high now to this low. So if the market pulls back, you guys can see that all we're doing is trading into order flow, right? So we're going to buy into this once we get that change of character. We need that change of character before we start buying. All right. So once we get that change of character, we're going to look for the buying opportunities into this sell right here. If we go past this, I am not looking to trade this. Okay. So let me delete that one. I am not looking to trade that one. Okay. I will honestly be looking for buys once we break this high towards the upside. If we react from here, that's good. If we don't, that's fine. Our buying opportunities are going to cover that loss. Okay, so that's going to be the most optimal way to trade GCAD at the moment, is to hedge it. Okay. And to be honest, if you don't want to hedge it and you just want to take the buying opportunities, you can do that as well. Now, eChef. All right. eChef is going to be our last pair, unless you guys have any other pairs that you want me to look at real quick. And then we're going to get into indices, and then we're going to close it off. So EuroChef. I like this market. This market is clean. Structure is clean. Everything is clean. All right. You guys can see we're having highs, lows, highs, lows, highs, lows, right? Clean structure, clean direction. That's what we like to see. Now, when we get into the price action down here, because this is where the price action actually got clean. Price action up here was, it wasn't that much. All right. This price action here, I wasn't looking at it. Now, last week, one of my students brought this to my attention, this area over here. So I will have a limit order here, right there. I'll have a limit order here on EuroChef, and basically it's going to be targeting 1 to 3, which is around the low. That will be a safe limit order. This area here is not confirmed just yet. So I was going to take this trade on Friday, but you guys know the low, right? We're missing one confluence. We need the low to get broken. Okay. So we're missing that confluence. That's the reason why I did not, and I am not going to take a trade from here. If the market ends up just going lower once we open and we break the low, great. This will be the area we'll take the trade from. Okay. I do have an alert there just in case if it does break it. So I will let you guys know. But for now, this is where I'm taking it, right? It's going to be the same criteria, guys. We have manipulation of the highs. We see an impulsive move, creates imbalance, and we have our clear break of structure, break of the low. This here was supposed to be the same idea. So we have the manipulation, check. That's our manipulation. We have the impulsive move. You see that candle? And we have imbalance inside of here, right? Check. The only rule that we're missing is the break of the low, right? Here we have it. Here we don't have it. So we can't take this trade right here. But what I will tell you guys, if the market comes up here and you see that we're reacting and we create a move to the downside, so on, like, let's say the 15-minute, the 5-minute, if we create that same move, let's say we manipulate highs, we get a break, and you see that same idea happen around this area, you can take a confirmation entry on the lower time frame. This case, I would risk less, probably risk half of what you usually risk, right? Because this is going to be on the lower time frame, it's going to be less probability, and because we still have the higher probability trade up here, you probably want to risk less just in case, okay? But that is an opportunity that you can take if we get that confirmation entry inside of there. All right. And so that's going to be eChef. Pretty simple. But if you just want to take the simplest trade, just have your limit order set right here and forget about it. All right. That's where I'm going to be taking it. And we're just going to be waiting for that trade. OK, I will watch it while it's in here, but it's not going to be something that I'm going to be like obsessing over. All right. If the market gives us something good, if it doesn't, that's fine. Now, indices. Indices. Let's talk about NAS, NQ, as a lot of people know it. What's going on? All right, so we swept lows. All right, we swept very, 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 very old lows. Here. We got into the 18,500. We really made it to, let's see, where did we get into? What? 16,000, 16,500. 16,500 is this area. Yeah, okay, there it is. Yeah, so here's our institutional price point, 16,500. You guys can see that's where the market tapped off here before we get that retracement back in 2021. So seeing that reaction, seeing these manipulations, great. So for the time being, we're gonna look for buys on indices for the time being, okay? We have a great impulse to the upside. And what I also like about this is the fact that not only did we barely give a retracement, we filled like only like half of this imbalance. I like seeing that because after this impulsive move, look how weak sellers are. That's great. That's great to see. And we're overcoming institutional price points. 18,500. That is also an institutional price point. If I go to the left, you guys see why. This is an area that the market was reacting off of multiple times, right? This is how you find these institutional price points, guys. It's the whole numbers, okay? Whole numbers, 18,500, 1800, right? All of these whole numbers, 1900, okay? Once you draw them out, you just want to go look back and see if this actual institutional number. How do you know? The market is reacting off of this area in the past. Okay, you can see it right here as well. That's how you know if it's an actual institutional number. Okay, so we see the market is overcoming these institutional numbers. So I'm going to look for buys when the market opens on Monday. Now, doesn't mean you just buy the market when it opens. This is not that type of market. We're going to look for bullish impulses. One of my mentees, one of my students was asking me how I'm trading indices. I am scalping indices. Now, once I get back to the live calls, remember I told you guys I'm going to be gone for half of the week. So I'll be back on Thursday. That's when we're going to start our live calls. We'll have a live call on Thursday and we'll have a live call on Friday. I am still going to be sending setups inside of the Discord. So just join the Discord if you still want to see what I'm trading during that time. So I'm still going to be active in the Discord, but I'm probably not going to be scalping those 3 days. I'll start scalping on Thursday when I can actually, you know, trade and be comfortable around my desk in my setup. Okay. I don't like to trade or especially scalp if I'm away. I don't like to do that. All right. I like to kind of, if I'm trading, I want to trade. If I'm out and I'm on vacation, I want to be on vacation. That's how you kind of want to separate that. So what am I looking for? Bullish impulses. So for example, here, I want to show you guys this, and this is for him. He knows who he is. I don't know if he's in here, but he knows who he is. I think it's on a 30-minute. So we're going to go right here. All right. What do you guys see happen? Let's go on to 1 hour. We see this impulsive move, and this happened because of Trump. Trump said, he tweeted, he said, this is a great time to buy. Markets moved. Markets just went crazy, right? Moved to the upside. We went to the imbalance, and you see we're reacting off this imbalance. So the mindset here, why are we looking for sales? Because I did take sales on this day, right? I was scalping my live account. I'm flipping accounts with indices at the moment. So I did take this sell and I caught a good amount of this sell. Why was I looking for selling opportunities? We have traded into an imbalance. The market has just given us an explosion. We're going to expect the market to retrace, right? That's my direction. I was expecting the market to retrace at least to fill majority of this imbalance. That was my idea. So drawing my fibs from this low to this explosion, I was expecting the market to at least trade back into 50%. This is a wide range from 50%. So I'm looking for selling opportunities. How do we do that? If you're going to trade indices, you always want to wait for New York open. New York open. New York Stock Exchange open. Okay? Price action before that really does not matter. I'm going to tell you guys that price action before New York Stock Exchange does not matter. It does not hold a lot of weight. Okay? So once New York Stock Exchange open, you're going to look for the market to move impulsively into your direction. What does that mean? So let's go into here. Let's go into the 15-minute. I wanted to show you guys this 30-minute imbalance because this is basically where I took my trade. But let me go into the New York Open to see where the market opened. So when I start out, this is what we do. Let's go here. Where is the New York Open? Where is the New York Open? Right here, 9:30. There it is. Thursday, 9:30. All right. Let's take on the 5-minute real quick. So 9:30. This is that candle. All right. What are we doing? When the market opens, all I'm doing is I am waiting. Okay. I am waiting for the market to create impulsive movements to the downside. All right. That's all we're doing. Whether it be on the 1 minute, whether it be on the 5 minute. I'm gonna tell you guys right now, 5 minute is going to be your safest area. So usually I'm on the 5 minute. I'll stick on the 1 minute just to kind of see what's going on. Are we creating any imbalances? So you can see right here, we created imbalance right there. We created imbalance right here. So this here was a trade that I did take, but it was a different trade. So let me kind of show you guys. So boom, right? You guys can see the open happened right here. I'm already looking for sales. Okay, my mindset is looking for sales. That's locked in. So I'm only looking for bearish imbalances. I'm only looking for bearish pushes to the downside. So you guys can see this bearish imbalance right here. Look what the market does. The market comes back into it and we trade into it. We don't just trade off of the imbalance when it happens. What we need to see is the market react off of the imbalance. Okay, so the market here is not reacting off of the imbalance. So we did not take a trade strictly off of the imbalance. Okay, so when the market came into the imbalance, all I was doing was watching it. What I also seen was this wick right here. You guys can see this wick that took out these highs right near the open. So I was watching this area. So what I told myself is, okay, this area, we can react off of this candle. Since we have closed above the imbalance, I need a candle that closes below the imbalance, right? So once I see an impulsive candle that closes below the imbalance, there's your trade. There's your trade. You want to wait for that candle. Once we close, you wait for the next candle. You see we have a doji. That's your trade, right? You take your sell, stop loss at the high. Take your sell to the downside. If you miss that, guess what? All right. Watch the candles. Watch the candles. Just watch the candles. So boom, sell, 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 sell. Look at this candle right there. Zoom in, there's your imbalance. You have a wick that comes into the imbalance. Here's a sell to the downside. Remember, we are scalping. So this sell right here, this gave you 400 points. Good lot size here on a 400 point move. You are scalping. Remember this. This you can make on a live account, depending on what your account size is. You can make around, I'm gonna just say a lot of money, right? I'm gonna just say a lot of money. You can make a lot of money just off of this move right here towards the downside. And you can see the market still respects that same area. So even if the market pulled back, you still have another almost 400 point move that the market gives you, okay? And then you can see what the market does again. So after we create the low, boom, okay, the market trades. Once we invalidate the imbalance, okay, fine. The market goes higher. All right, cool. Market goes higher. What are we looking for? We're looking for the next move to the downside. We're looking for the next move. Why? Because now we have structure. So the market reacted from here. We got imbalance pushed to the downside. We broke this low. We're retracing back. Where are we coming back into? This area that started that move. You're going to trade the imbalances going lower again. Okay, it's that simple. Why can we do this? Because we're confident that we know we want the market to fill this range, getting back into the 50%. And I also knew that if the market was going to bounce, this is where it was going to bounce at, right here at the 18,500. I believe I was not trading NAS. I think I was doing this on US 30 because the price action was a little bit different. Yeah, here it is. Okay. Because you guys see that NAS did not make it back into this imbalance right here. And this is where I actually took my next trade. This imbalance here, NAS didn't make it into it, but US 30 did. And that was a trade that I did take here. Boom. That trade right there towards the downside, right? And you guys can see the market falls. We come back, we mitigate again, market falls, okay? All of this is dependent on knowing your directional bias, okay? So you guys see, before you go to the lower time frame, before you start scalping, you have to understand the higher time frame. What are you looking for? Okay, are you looking for buys? Are you looking for sales? And why? Why are you looking for buys? Why are you looking for sales? It's that simple, okay? And then when you get to the lower time frame, you want the market to show you that with impulsive movements that gives you imbalances. Once you see the imbalances, you trade off of the imbalances. So what I was doing as this market was coming back into imbalances, I was taking my trades. So how do we do that? On the 1 minute time frame, the market comes into this imbalance here. Once this candle closes, sell, stop loss at the high of the imbalance. That's your trade. Okay, and you can see the market gives you, this is exactly where I took this trade. On US 30, 156, I made around, let me go check. Off that small move right there, let me see. Because I forgot the lot that I put there. Henko. So I'm flipping small accounts on Henko trade at the moment, and off that move, I think I threw, let me go see. Okay, I made around $105 in how long? In 7 minutes. Off of that simple move, guys. In 7 minutes. Now imagine if I was taking this on a bigger account or on a funded account. I don't trade like this on my funded accounts. All right, I only trade pairs on my funded accounts. When it comes to live accounts, I like trading indices because they're faster. Okay. So you guys can see, right? That small move That's it. That's all you need. All right. If you have a larger account, you could scale that. You could have probably made $1,000 in a day, $2,000 in a day. I see people making like $2,000 in a day off of these moves, but you have to be able to risk that much money as well. Understand? I'm flipping small accounts, so I don't want to destroy the account. I'm not going to over leverage and destroy the accounts, guys. All right. So those small moves, and then I can repeat that move over and over again. So what am I going to do? You guys can see I have these imbalances right here. I actually took my profits a little bit early on this day. So we took the profits here. Look what happens. The market comes back. I have these imbalance here. I think we just leave after this. Yes. Yep. I remember this move. Took profits a little early, so I could have made a lot more. I could have made a lot more. But we come back here, we mitigate this candle here, and you can see the market just leaves, right? And we didn't come back and trade into any of these imbalances I was looking for. I think this was on the 5-minute. Yep, there it is right there. We just didn't come back. So you guys can see the potential, right? You can see the moves, and you can see what, the opportunity is there. And all of this was just based on my directional bias. What was my directional bias? All I wanted was the market to just fill this imbalance. So I wanted to see reasoning of why the market wanted to fill the imbalance by looking for those bearish pushes. That's it. Okay. So, I will talk about this more because right now I am forward testing it. I want to create a more consistent step-by-step. You guys can see how I have more of a consistent step-by-step for my pairs. I want to create a more consistent step-by-step rule guide for this before I kind of just present it to you. I wanted to talk to my student because he asked me to go over this because he mainly trades indices. Now I told him I've been scalping indices, so I want to give him an idea of how I scalp indices. So I want to create a step-by-step rule guide on this for you guys that's more clear, but I need to do more forward testing on it. Okay, so once I get all of that data and I can see it all, then I will create that rule set, and then I will tell you guys exactly and give you guys what to do and what not to do. Right now, I'm forward testing it myself on live accounts. Okay, so the proof is in the pudding. Okay, the proof is in the pudding. I'm forward testing this right now before I share it to you guys and give you a step-by-step guide on what to do. But for the moment, what I'm looking for is usually directional bias. And I'm looking to see what's the next move. So, for example, what am I going to look for Monday, right, when the market opens? So, what are we going to do Monday when the market opens? Let me delete all of this. I did not trade Friday because the market did not move. You guys can see the market did not move here, and we barely gave anything. So, I did not trade on Friday. Let's go to the 1 hour real quick. What do we see? On the 1 hour time frame, what do we see? Imbalance right here. All right. I will keep that in mind. One hour imbalance. Did the market feel what we was looking for? These lows, I expect these lows to be coming taken out someday, but not today. Did the market come back into 50%? Yes, we did. What happened when the market came back into 50%? We got a wick and we're seeing the market go higher. Okay, cool. Market came back into 50%. That was our retracement. Retracement is over. What's the next target? These highs right here. So when the market opens on Monday, I'm going to look for one or two things. If I see the market opens and we sell off, and I'm seeing bearish imbalances, I am not going to trade them. Why? Because we have a 1 hour area here that I'm going to wait for the market to get into. So when the market gets into here, if we break through it and I still see bearish imbalances, okay, nice. I will trade the bearish imbalances, right? After we break here, we need to see bearish imbalances push through here, and then we can trade the bearish imbalances going down, maybe taking out this liquidity. Cool. If the market wants to do that, fine. But if the market comes lower and we get a reaction and I see we start creating bullish imbalances off of a 1 hour imbalance, we're going to trade that move, targeting the highs. That's it. That's what I'm looking for. All right. So It's really dependent on this area. And you're saying, what if the market opens up and it just starts going higher? Fine. We have liquidity up here. I will target that liquidity. So that's what I'm looking for here on indices. And it's going to be the same for NAS. It's going to be the same for ES, right? They're all kind of the same. The reason why I switched through, the main two that I do trade is NAS and US 30. I would say I like US 30 over NAS. US 30 is more, what's the word I'm looking for? It moves with more structure. It's a more structured pair. I wouldn't say pair. It's a more structured indice. NAS is wild. I will tell you guys, NAS is wild. NAS makes some crazy moves by itself sometimes. So most of the time I like US 30, but it really depends on which one gives me the best area, right? You guys can see that trade that I showed you guys. NAS did not fill the imbalance, but US 30 filled an imbalance. So I took the trade on US 30. So it really depends on which one is giving me that move and is giving me that area, okay? So if US 30 comes down here and it doesn't tap into imbalance and it just explodes, but NAS, look on NAS, we don't have an imbalance, right? You kind of see the difference here. So I'm not going to be looking for NAS to come lower and fill any imbalance. I'm looking for that on US 30. You guys can see that. You see the difference. Even though both of them are moving in the same direction, one of them have an imbalance that I can trade off of, NAS doesn't. So if NAS moves lower, I'm not going to pay attention to NAS until we start seeing explosions. All right? Versus US 30, this is going to be what I'm going to be paying attention to, because if we do move lower, this is the area that I'll be watching. And guess what? Look where this imbalance is. It's at the 40,000 institutional price point. That's another confluence. 40,000 institutional price point. Let's zoom back. Let's see. Is this a real area? Yes, it is. Why? Reaction. 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 Right? Look what happens every time the market gets near this price point. That's how we know it's an institutional price point. So guess what? When the market comes down here, what are we going to expect? At least a reaction. Okay, it's just more confluence. It's just more confluence, guys. So that's what we're looking for. That's what I'm looking for on indices. I'm going to be looking to see us get back into this 1 hour imbalance, tap back into the institutional price point. I'm going to be looking for bullish imbalances off of this area towards the upside. And that's going to be my scalping trade that I'm going to take. And basically, I'm going to target these highs right here. All right. So that's pretty much it for me, guys. Thank you guys for being here. If you have any questions, I do have to run. I have some errands to go run real quick. So if you guys have any questions, please let me know in the Discord. If you're not in the Discord, there's a free link, and it's a free link in every one of my videos. You can just go to one of my videos and you'll see the link to join and ask me the questions. Ask me what pairs that you want me to look at. If you have any other pairs, if you have an idea, or if you have a different analysis than me, that's okay. Share that to me and I will look at that and we can talk about that together and share our points, share our ideas. Okay? Because I'm not right. All right. Just because I'm sitting here and I'm talking to you guys doesn't mean I'm correct. Okay. My analysis is not better than your analysis. So you might see something different than I do, and you might be correct and I might be wrong. Okay. So if you see something different, let me know and we can talk about it and share our ideas. Other than that, thank you guys for being here. And let's make some profits this week. Okay. EU is something that we're still in. For those of you that joined into that EU trade with me, I will be going reduced risk once we hit this alert. That's going to be at a 1 to 2. We're not there just yet. So once we hit that alert, I will let you guys know. And basically all we're going to do is move our stop loss to underneath this low. So that way we're covered on our trade. And if the market comes down, we're only losing a little bit. The reason why I don't go full break even is because sometimes the market will come back, tap the break even, and just go higher. I've seen that happen inside. While I was back testing a lot, and that can happen. So we just don't want to lose a potential winning trade just because the market wants to come back and tap the open. Okay, we'll tap our open of where we took our trade. We don't want that to happen. All right, so that's why we just put our stop loss underneath the low, just in case. Okay, and that is pretty much it. Going to be the analysis. Like I said, I thank you guys for joining in. The next live call will be on Thursday and Friday. I'm going to be out for Monday, Tuesday, and Wednesday. My birthday is coming up, so I'm taking a vacation before that time, while the weekend, just going into the weekend, from the weekend, I mean. So I appreciate you guys for being here, and I will see you guys on Thursday, and I will see you guys on Friday. All right. I will be sending my trades out during the week, so join the Discord for any updates about any of the pairs or any setups that I'm looking for. Thank you guys for joining in. I will see you guys in the next one. I will see you guys in the Discord. Peace out, guys. Have a profitable week.